instructor. In this video I'll be explaining a simple model you can apply early hours of the day and make some money for yourself trading currencies. Alright, so the first thing to do is, if you take a look at this place here, you see I use the vertical line. If you don't know where to select the vertical line from, it's right here. Alright, so you click on that three dotted line. Sorry, it's here. This thing looking like kind of like a pencil. This one here, that's where you click on, and you click on the vertical line. If yours isn't placed at this favorite, you scroll down. It's here. It's here. So you click on the vertical line, then you set it to 1 a.m. Alright, here, then you move it, then you take another one, or you clone it. Sorry, take another one here, or you clone the vertical line and keep it here at 5 a.m. Alright, so when you do that, you just look at the direction of the price, like where is the price moving to. For this one, this happened early hours of today, right? And here you can see the break of structure here, right, and another break of structure here. To get this thing right and like enter at the right time and leave at the right time, so you need to be very focused. Like, you need to avoid distractions and be very focused. And also you need to also know how you can identify a break of structure or a liquidity point fast, right? Those your point of liquidity will be your take profit. For instance, have a look at this place. This was the take profit. If you had left it longer than this, it will reverse, and you will be thinking it will actually go back to your direction, and it won't. And you need to be patient and disciplined. All right, if you might not see this setup every day, so it's not an assurance that you see this every day. Once it gets to 5 a.m. and you don't say anything, just forget about this till the next morning. All right, so now let me show you how you do this now. For instance, this is a break of structure already here. This template I'm showing you, I actually learned it from someone. All right, and I just want to show you this. If it's for a downtrend, this is the template. You might have seen this somewhere. Just doing a rough sketch here. This is a downtrend, then this should be a break of structure. Sorry, let me let's use this instead. And for the confirmation, we'll be using a tool here called the GAN box, GAN box. Alright, so I'll be showing you how to make use of it here in this video. Let's change this to change the color. So that's the break of structure, and is for an uptrend. you do the opposite. Basically, you do the opposite for trade. Let me just do it very fast. Sorry. So this is a break of structure. Now, when you mark out your break of structure, right, you understand the market structure, then you check for liquidity. All right, you can mark out a place basically, and okay, I don't know if you watching this know how to recognize a weak high or a weak low. All right, so let me just show you something real fast so you don't follow this and end up making mistakes. For instance, it's on a downtrend, right? And instead of breaking this thing, breaking this structure, it ends here, then it moves up. You see, when it does this thing like this, it doesn't go down, it goes like this. This here, let me indicate it. This one here is a weak high. And what happens to a weak high? It comes back and it gets cleared. The price comes back to that direction basically, and it clears this one. So if you had it clears up here, then it comes down and continue the trend. So if you had placed another here, or you think if it comes to this direction here, or this, you would basically place a sell order, you get kicked out. All right, so that's a weak high, and the inverse is the case for an uptrend. All right, so let's get back to what we're doing. So this is a break of structure, and this was the template we would follow. Now when you take a look at this place, and we've already marked out our break of structure, and remember this is on a 1 minute time frame. 1 minute time frame. This is a break of when you mark out this break of structure, our entry is based on imbalance. All right, and we'll use the Gantt box to confirm our discount and premium point. All right, now an imbalance basically is, it looks like this. All right, then like this, right, then like this. The distance between this first candle and this third candle is the imbalance. So let me show you on the chart so you understand. Okay, look at this now. Now the distance between this candle and this wick here, this third candle wick, this is the imbalance here. So we'll be using that as our entry, and the Gantt box, this is what it looks like here. This is the Gantt box. It's here. It's top here because I chose that my favorite. All right, so if you want to choose it, you would go down to where is it? Should be here. All right, this Gantt and Fibonacci, this is where you find it. Look at it here. All right, so we'll select it. Then if this one is on a downtrend, you take from the last higher high and to the recent, like the recent higher high and the recent higher, lower high and lower low. Sorry, I'm so sorry. Now you might be asking why, if you don't know how to make this color like this, then you click on this you click on it, then click on this three dot here, then click on settings, and you just make the okay. Now what if you haven't tampered with this before? All this will be switched on. All right, so it's now your job to basically take away 0.25, 0.382, 0.618, 0.75, and these two will be a different color basically. So you are left with 0, 0.5, and 1. Then this, you change your 0.5 to any color you want. I prefer blue because for this I just like seeing it on my chart that way. All right, so you press OK. That's how to select it. Now this one at the top here, this blue premium is the premium point. Then this black shade here is discount. So let me show you how it works. All right, let me show you how it works. Now if it's on a downtrend, we expect after price breaking structure, we expect it to come back to this premium zone and mitigate an imbalance here. So your other block will be an imbalance here on the discount zone. Let me go again. If it's on a downtrend, after price breaking structure, we expect it to go back to this blue zone, which is the premium zone here. We expect it to come here and mitigate an imbalance, then goes down. Now your take profit, don't just leave it to run like that, because this on a 1 minute time frame, need to be very fast. Your take profit should be either the point of liquidity here or the previous low. All right, so now for an uptrend, let's try an uptrend. When it breaks the structure and is coming back, it should mitigate. Let's click on the Gann box now. How to plot the Gann box on a uptrend and an uptrend. This one here, the recent high, the recent low. Adjust it like this. So now I told you this this blue shaded place is the premium and this is discount. For buying, you need discount, then for selling you need the premium zone. All right, so when it breaks structure and it comes back, it should mitigate an imbalance here inside this black shade, which is the discount zone. Then it will go up. It needs to break this structure. You either set here as your TP or set the maybe a liquidity on this downtrend here. Maybe there's a liquidity on the downtrend here. All right, maybe there's a liquidity here. Let me show you something. Like there's a liquidity here before this one. Then you can set here as TP or set this recent high as a TP. Hope you understand what I'm trying to say. If it's on an uptrend, it needs to break structure, break this red line. That's the break of structure. It breaks it, comes down to mitigate imbalance on the discount zone, then goes up. That's your entry. And if it's on a downtrend, looking for a selling opportunity, it needs to break the structure and goes back to this zone, this premium zone. If it doesn't go back there, just wait. I'll show you why you need to wait. Don't take, just leave your order there. Or if you are executing, if you are using market execution, wait, don't take the trade. Allow it to go back to that premium zone, or the discount zone is for an uptrend. All right, so this here must come here, then mitigate an imbalance, then you sell. All right, so for today, early hours of today being the 20th of June 2023, you can see it broke structure here. It broke the structure. All right, and we're told it needs to come back here, mitigate an imbalance on the premium zone. Now let's check this out. the recent high. If you zoom this very well, this was a higher high, higher low, higher high, higher low, higher high. So you can see this I said was the premium zone and this is discount zone, and it needs to come back here and mitigate an imbalance before you sell. Basically, that's what it needs to do. All right, so you might be asking yourself, you don't know how to, even if you don't know how to spot imbalance, click on this place on your trading view. All right, this plus sign here, click on it, click on indicators, click on it, click on indicators, then search for imbalance. This one, select this one. This one only, there are a lot of imbalance detector, but this locks algo, that's what you should select. Then when you select it, it will appear right here. All right, so now you see, let me take out this gun box so you can see clearly. Why did I mark here as my entry point? Now, is there an imbalance here? No. Where's the imbalance? Here. That's the the main imbalance, because when you take a look at this place, it's ranging. It was ranging and it formed these equal lows here. This point, why I mark this point dollars and I put the dollar sign, the $3 signs there, because the point of liquidity. Equal lows. All right, so this you won't take any of these as imbalance. That's why, and if you put the gun box, you see this thing was just moving on discount. It did not get into the premium zone. All right, that's why you need the gun box. So I saw this here. All right, I saw this, the imbalance, and instead of just putting my block here and then to take it up here, this is my point of invalidation. All right, so if price from this place now, if this price went up here and broke this place, broke here, then I'm not correct. Then this analysis, we don't get correct most times, but like we know we want to stop our losses here. We don't want to come back and maybe doing something and come back and see too much losses we didn't bargain for. All right, so this is my point of invalidation. If it breaks here, it means this trade is off. All right, so so you need to monitor it. That's why you need focus. You need to be focused. You monitor it. It will be coming down. Immediately it breaks structure. Let me show you something. Immediately it breaks structure. It breaks structure. Just wait for it to create this low here. All right, why? Because you will need it for your gun box. Wait for it to create a definite low. All right, because you need it for your gun box. When it creates this low here and starts retracing, even for this first retracement, just leave it. Don't move, just allow it. Keep moving, keep moving, keep moving. This has already been set already. Keep this here. All right, that's why you need to be very fast. When you keep it here, you wait and wait and wait. When it comes here, and if you are setting a sell limit, don't need to worry, you don't need to wait for any confirmation. But if you are following market execution, you might wait for this to start. Like when it comes here, you can check candle patterns, then you can start selling from this place. All right, start selling there. So this is just basically what it is. All right, now for you might be asking why I set this place as my TP. if you move back in time, move back in time, if you move back in time, this was liquidity. All right, that was why I made the long line there. And you see, when it came here, it bounced and it moved down a bit. It won't go far. After market clears liquidity, it most times doesn't go far, and it starts retracing. Right, starts retracing. Basically, that's what it does. So that was how I caught the first sell. Now buy. Check here. It broke structure. Then it started retracing. Remember, this was the recent high. If you form this high, when it breaks structure, you put your order block. Then when it forms the high, you put your gun box. That's just basically what it is. When it breaks structure, put your order block or whatever, your buy limit or sell limit at imbalance here. You see this imbalance? Put it there. And when it breaks, you might not set it on your MT5 or MT4, but just put it there. And when it breaks, when it makes this high here, this one, then you can simply do this and wait for it to come back. As you can see, it came back to this discount zone. When it came to discount zone, you can see it mitigated this imbalance here. That's the imbalance. Mitigated imbalance on the discount zone. Then it went up. Now see where I chose as my point of taking profit. This place. All right, you can see this place. That was where I chose as my point of taking profit. All right, so that's just basically how it is. From 1 a.m. to 5 p.m. get this ready. You can get it ready before the time, because you can get ready before the time. How? For instance, now this is 8:52. Then I take this vertical line. You can see the price moving. I can now set something here for 10 a.m. You see, even before it gets to that place, just set it and wait. To make it clearer for you, you can even use like the rectangle here to maybe shade just this place, just 1 a.m. to 5 a.m. So that's just basically what it is. Alright, so if you don't understand, watch the video once, twice, 3 times, watch it again and again until you understand. Alright, so I'm Joy Alta. Have a blessed day. Alright, have a blessed day. Thank you.